Well, thank you, John, and I want to welcome all of the Comply attendees joining us here today. As John mentioned, my name is Milton Marquis, and I'm a member of the State Attorneys General practice at Cozen O'Connor, and I'm based in Washington. I'm happy to be back at Comply hosting this session. I hosted a session back in 2019, seems so long ago, when we were all in person at a very nice location in New York. So the focus of this panel is on state enforcement, state regulation. And, it's one of the geniuses of our founding fathers is that they created a federal system where states have a great deal of sovereignty and independence, which means that state attorneys general, and in this case, the New York financial regulator, have a lot of independent authority. So today, I'm honored to talk to our guests about how about the offices that they lead. We have representatives and leaders from New York and Pennsylvania. These offices are really at the forefront of consumer protection. I know that, having defended clients before these agencies. So this is a great opportunity to learn about their offices, a little bit about them, their offices' priorities, and how their offices impact your compliance practices. So let's get started by welcoming our panelists. So first we have Katie Lemire. She's the Executive Deputy Superintendent of the Consumer Protection and Financial Enforcement Division at the New York State Department of Financial Services. And then we have Nick Smith. He's a Senior Deputy Attorney General in the Pennsylvania Office of the Attorney General, and he's also the Assistant Director for Consumer Financial Protection in the Pennsylvania Office of the Attorney General. So I want to welcome Katie and Nick, and I look forward to having a great conversation, which I'm sure will be very informative to our guests. So the first question, and this is an easy question. I gave your titles, but I think our attendees would be very interested in hearing a little bit about your background, how you came to your current positions, and a little bit about your offices. So Nick, why don't I start with you?
Sure. It's great to be here, Milton. Thanks for hosting this panel, and it's an honor to be here with Katie. The New York DFS is one of the most terrific agencies that in all the states aspire to be as good as DFS, and also the New York AG's office. So I lead the Consumer Financial Protection Unit in the Pennsylvania Attorney General's office, and it is within our Bureau of Consumer Protection. We have about 25 attorneys across the state, and at any given time, between 12 and 15 of them are working on consumer finance cases with me. Since I started here in July of 2017, the AG brought me in to expand our capacity to take on complex cases. And we've brought cases in particular against Navient, one of the biggest student loan servicers in the country. And we've done big multi-state investigations with our partners, including, for example, Equifax and Wells Fargo. We've brought $190 million in relief back to Pennsylvania consumers since I started here. And it's a really good time to be working in the state AG's offices. My previous experience was with the Consumer Financial Protection Bureau. And of course, we're seeing big changes there now, which I'm sure we'll be talking about.
Great. Katie?
Yeah, hi, thanks. And wow, Nick, thanks for the kudos. I really appreciate that. And kudos to all of you there on the Navient front. Some really admirable work that you guys have done over there. And thank you for the nice introduction as well, Milton, and thanks for having me. So just briefly, my background, I am, why I say am, so it's kind of the best job I ever had. I was a federal prosecutor, really a career prosecutor. Started out in the Manhattan District Attorney's Office, went on to the Southern District of New York, also located in Manhattan, and was there hired by Jim Comey. and was there for quite a few years, did a fair amount of white collar work as well as the violent stuff. And zigzagged around a bit after that, and then came in as executive deputy superintendent, overseeing consumer protection, financial enforcement in 2019, soon after Linda Lacewell was appointed superintendent by Governor Andrew Cuomo. And I just want to give a little background about DFS, because it is Department of Financial Services. It is still a relatively new creation. It was created in 2012, and what it basically was and was a smushing together of what were historically the banking department and the insurance department. And the idea was, in the aftermath of the 2008 financial meltdown, that all financial services regulation and enforcement would be brought under one roof. Bridging those different worlds within the agency, I think that actually was a great idea. And so what we have jurisdiction over then are our licensees, right? So on the banking side, that primarily means many of the foreign bank branches and offices. It also means smaller community banks. On the insurance side, it means the insurance industry, largely in its entirety. And then also, I know there are some people here from Plaid, for example, fintech, et cetera. We do have a hodgepodge of jurisdiction there as well. Our jurisdiction is financial services. It's a little more complicated than that, but we do have quite a bit of jurisdiction in that world that we still bluntly kind of call fintech. Some of you may know that the Department of Financial Services grants BIT licenses, in other words, licenses to operate a virtual currency company platform serving residents of the state of New York. And so in my world, I oversee that as well. So what I do, then bringing it back to me, is I oversee several different units, but most relevant, I think, for our discussion today is the enforcement unit. And in the enforcement unit, in addition to the other big one, actually, for purposes of today, is the consumer examination unit, which covers CRA exams, for example, student loan servicer jurisdiction. And so where we have gotten a lot of media coverage in the last years, I'm sure you know, are the big bank settlement cases, the monitorships. That's part of the world I oversee. We also oversee enforcement of our cybersecurity regulations. I'm going to come back to that a little bit down the road here. And we bring in a lot of money. I think last year it was something about $600 million that we brought in fines, et cetera. And I think that's a pretty good summary of what we do there. One last thing to add is that in overseeing enforcement, I oversee basically, in a sense, the entire agency. I bridge many of the disparate worlds and subject matters and jurisdictions that we cover.
Well, that's great. So, Katie, I guess just one quick follow-up question. I mean, how large an organization do you have? It seems like you have a wide breadth of authority.
Yeah, of course, I wish we had more. The agency as a whole has about 1,300 people, and I oversee about 175.
Well, great. Well, thank you, Earl, and again, welcome to this panel. So most of us are working from home. I know I have since St. Patrick's Day, basically, and that's unfortunately it's the new normal, at least for the foreseeable future. So I guess the first question is, how has the pandemic shifted your office's focus? What impact has the pandemic had? Katie, why don't I get started? You can take this one first.
Sure, there's a lot of ways I could answer that question, but one thing that immediately springs to mind is the following. So DFS, one of the bread and butter businesses of DFS is examinations of our licensees, banking, insurance, our BIT licensees, et cetera. And from the day that Linda Lacewell started at DFS as superintendent, she's had an eye towards modernizing the examination process, automating much more of what we do, and automating, for example, red flags, et cetera, because we all can't be everywhere at once. And I think that if anything, the virus has made all the more imperative that need. I think back to the early days, and it's quite astounding to think back. We're heading towards a year of this now, so it feels like years ago, frankly, back when we all started working from home. But we had this weird disjunction that that happened back in March into April, where we weren't working from home yet as the virus was starting to make its rounds, but the banks were starting to work from home. So it was becoming quite difficult, if not impossible, to do some of those examinations, for example. And so I think it has made it more important, the need to automate, to be able to do a lot of the work remotely, rather than sending people over looking through boxes and boxes and boxes of paper. And so, bringing it back to the audience here, I know we have a lot of compliance people in the audience. One thing to think about, a takeaway, is are all of you doing all you can to modernize that way? I know on the BSA AML front, there's plenty of that goes on. In fact, I know there is an expectation with institutions of a certain size with so many transactions that these reviews are actually automated. But, thinking of fintech, thinking of insurance, thinking of our BIT licensees, it might make sense to look at how could you all operationalize in a more automated way going forward. I think of the insurance industry, making sure that producers are properly licensed, everyone's renewing, automating other kinds of red flags, potential for consumers being defrauded, rates being calculated as they should be, et cetera, and so on. I could go on for quite some time, but that's the answer to the question. Automating, modernizing, it's made it very clear this is where we've got to go. We need the money to do it, I have to say as well. And we're, as we all know, quite a bit short of money right now in the state of New York, as all the states are, but it's something that needs to happen.
Well, thank you, Katie. So Nick, I'll ask you the same question. I know that the AG offices and your office is not an exception, have been very busy. It seems that like DFS, Pennsylvania AG's office and other AG offices move very quickly to remote working and got technology up and running. I know that because my clients have received various subpoenas from your office during the shutdown. And it doesn't seem as though you all have missed a beat, but I'll let you speak for yourself, Nick.
Yeah, I think that's right, Milton. We found that initially we actually became even more productive because I think people found that working from home, you lose the commute time. In some ways, it's easier to focus. Although if you're also trying to teach your kids kindergarten, it can be difficult. But we've had two main areas of policy focus since COVID. One was, of course, price gouging. And I don't know that that's a traditional consumer financial issue, but obviously that has a huge impact on people's finances. And so I volunteered to help out with the price gouging cases. And it's been a major focus for Attorney General Shapiro. As of a couple weeks ago, we had received nearly 6,000 consumer complaints about price gouging in the Commonwealth of Pennsylvania. We issued over 500 cease and desist letters, and we've had probably close to 2 or 3 dozen settlements in the form of an assurance of voluntary compliance with various companies, big and small, involved in price gouging. We also even sued a company. I brought our first price gouging lawsuit against an Amazon seller that had been selling hand sanitizer bottles for between, I think, $65 and $75 for an 8-ounce bottle on Amazon. So we've been very strict on price gouging. Our state law is very clear that, you know, if once the declaration of emergency happened, which was March 6th, companies couldn't charge more than 20% of the average price those goods or services were sold for prior to the emergency declaration. So that was a big focus for a long time. Obviously now a lot of that has calmed down. You know, the supply chain for hand sanitizer has worked itself out. At the same time, of course, all of our regular work continued, but we also turned to the protections that needed to be put in place for foreclosure and also evictions. So we launched what we called the PA Care Package. The name is similar to the CARES Act, which was one of the early federal relief bills, but the PA Care Package was a voluntary relief initiative that the AG put together and asking banks and financial institutions to sign on to say, we will do more to protect our customers than what the law requires. And so it's on our website. If you go to attorneygeneral.gov/COVID-19, we have an outline of what it required. But essentially, banks agreed and other companies agreed to a 90-day grace period for mortgages that weren't already covered by the CARES Act mortgage moratorium, 90-day grace period for other consumer loans, such as auto loans, and a 90-day window for relief from fees and charges, such as late and overdraft fees, as well as a foreclosure, eviction, and auto repossession moratorium for 60 days. So again, some of that was already required under the CARES Act, but you know, the vehicle repossessions weren't covered, and so we got lenders to do that voluntarily. And we had, I believe it was 16 institutions signed on, from big banks like PNC and Citizens Bank to community banks to, you know, credit unions, and we had a non-bank auto finance company as well. And we really appreciated companies signing up. I think we put out statistics a few months ago that consumers had saved over $10 million in fees as a result of this voluntary initiative. And you know, typically our work is more like what Katie was describing. It's enforcement actions. We're out there filing lawsuits or filing settlements that are enforceable in a court. But this was different. You know, this was a voluntary effort. Companies didn't have to do it, but you know, we encouraged them to. And every time someone signed up, we put out a press release praising them. So we like to think of all of the authorities that our office has, and also use carrots, not just sticks, to encourage positive behavior by big companies.
Well, that's great. Well, thank you. Thank you for that. So I want to turn, in this, Nick, question for you. The attorneys general, as I indicated in my opening, have a lot of independent authority. Every state attorney general, just focusing on AGs, is a sovereign. But as sovereigns, they can and often do choose to work together. And your former CFPB official, I was formerly, like Katie, formerly in Justice Department, you know, and so so state AGs can kind of replicate kind of the federal nationwide scope of enforcement actions by working together. So I'm sure that our audience would like to know, since you are an insider, what triggers a multi-state? What are the types of cases? I think you mentioned some of them when you know, the Wells Fargo and Equifax in your introduction. As I'm sure you know, my colleagues and I were involved in Wells Fargo and some of the other cases that that you may mention. But whatever you can share with us about what triggers a multi-state and how do these states actually work together?
Sure. Well, the multi-state process goes back many years. I think the biggest and the first major use of the multi-state was in the tobacco litigation, where the states banded together and got the then historic settlement against the tobacco companies. But multi-states can be driven by a number of factors. In the case of Equifax, it's obvious, right? You'll have major news break, and immediately the AGs will be calling and texting each other and saying, okay, let's get to work on this, let's investigate. And the way a multi-state works is you'll have as many states that want to can sign up. And so oftentimes it's 50 states plus DC. You might have territories like Guam participating in Puerto Rico. And other times it'll be a smaller group, in the 30s is very common. And the work is assigned out and managed by what's called an executive committee, which I'm sure you're very familiar with dealing with. And that might range from 5 states to 10, depending on the complexity of the multi-state. And in some cases, you'll even have another smaller group called the leadership, because everyone raises their hand, they want to help out. So you have sort of multiple levels of responsibility. And the leadership might be have attorneys that are working on that case and only that case, right? In the case of Equifax, there were probably 10 attorneys around the country that only worked on Equifax for many months. But then you had another 30 or 40 attorneys who were also working in the leadership states or the EC states and helping out behind the scenes with document review, with crafting requests, with thinking about the various elements of the case. So it depends on the size of the multi-state. You can also have much smaller multi-states. And oftentimes, states will just work together, and it's not a formal multi-state, but it's 4 or 5 of us, and we're sending requests that are coordinated and filtered through one state or another. And that benefits both the enforcement agency and the target, right? Because instead of dealing with overlapping and maybe conflicting requests from 4 or 5 states and maybe a federal agency like the FTC or CFPB, you as outside counsel are just receiving one set of requests, and that you've got one email list you can reply all to, and everyone's sharing the same information and speaking with one voice. So it's a really good process. I think it allows us to be much more effective than if we just worked on our own, and it saves a lot of time for everybody.
Well, Nick, I couldn't agree with you more. We sometimes get a lot of pushback from our clients when there's a multi-state, and they don't like the optics of being investigated by a multi-state of 35, 40 AGs. And we make the point that you made, and now I will cite to you, since this is a public statement that you're making here, that it's really in your interest to have a streamlined process, because the worst thing that can happen to a company is having inconsistent subpoena obligations. And so I'm glad to hear that you said that, and it certainly is consistent with our advice to our clients. So we have a couple of minutes, and I want to just ask a very quick question, and Katie, I'll start with you. How do you get interested in a particular matter? Obviously there are consumer complaints that come in. Is that what generates some of your enforcement action? And what advice do you have to our audience if they get inquiries from their customers, and they may send those inquiries on to either your office at DFS or to an AG office? So Katie, why don't you take that question?
Yeah, we start investigations based on multiple sources and occurrences. One is, like you just said, consumer complaints. The consumer complaint unit actually sits under me as well. As you can imagine, we take calls, we take emails, etc. And I have someone in charge of that unit who's very good at looking for bigger picture trends, and very good at bringing issues to me if there seems to be something that merits a larger investigation. And of course, there's the good old reading the newspapers, seeing what the media is digging up. The media can be very much our friend at times in terms of finding matters that should be looked into further. And of course there's whistleblowers, just like when I was a federal prosecutor, right? Those at times can be the best jump starts to cases when you've got someone inside who was treated very badly, or rather or both, was that and a witness to
Right.
some misconduct, wrongdoing, et cetera, inside of a company. So that really does sum up, where our cases come from. I should actually add something else, which is when our supervisory units, in other words, those in charge of doing examinations on banks, on insurers, on our BIT licensees, when they come upon things that merit more than a regulatory slap on the wrist, sometimes we may start a broader investigation as well there.
Well, great. Well, thank you. So, Nick, I'm going to ask you, and Katie, you can chime in. Do you have any closing advice to our compliance professionals from an enforcement standpoint?
I think just focus on the complaints, and not the ones that come in through your regulator or through your AG alone, because those are a fraction of the complaints. But I mean, focus on what your consumers are saying to you in your chats and in your customer service calls. And that really tells you if you've got potential problems. There are a lot of consumers who are confused by products, who call up and don't understand how something works, and they may try to cancel something, and it may be in your business interest to make it difficult for them to cancel. But if you can run your business in a way that you'd recommend all of your friends and family to sign up for your product and to pay for it, and all the add-ons that you offer, then you should sleep well at night. And if you're selling add-ons that you don't think your mom should pay for, then maybe you shouldn't be selling them, because they might not be such a good deal. So I think that's the high level message. Also, remember that candor is always a virtue when it comes to enforcement investigations. We all talk to each other, so don't assume that because you're just dealing with one agency that we're not telling all the other agencies about our findings. And it's always better to just come clean, because if we find out a few months later that someone else is investigating you or subpoenaing you, or you got some lawsuit that's going on that you thought we wouldn't find out about, that doesn't reflect well. So thanks for listening, and appreciate the commitment of these companies to compliance.
Well, that's great. Of course, the MOM standard, you can never go wrong if you follow the MOM standard. And I do think it's very important for companies to actually track internally where they're getting their complaints, right? So that they can be proactive in understanding that, well, maybe this disclosure wasn't so great. Maybe this, as you said, you're getting a lot of moms complaining that maybe we ought to rethink this particular product. So, Katie, I'm going to let you have the last word on advice.
Yep, I got one word. I'm going to pivot here for a moment. Cybersecurity. We could have a whole hour talking about that, but if you are in compliance, make sure that your organization, your company, is up to snuff on the cybersecurity front, because that train's coming down the track. For those of you who are not our licensees, you may have some time, but we have in place now cybersecurity regulations, which require not very onerous stuff. You got to have a chief information security officer. You have to have particular policies, et cetera. Data privacy, consumer data privacy, I think is a wave that is coming. Federal agencies are taking DFS's cybersecurity policies and adopting them wholesale. I think the FTC has a version of ours out right now for notice and comment. And I will tell you, having brought now the first cybersecurity enforcement action, what we're looking at in some ways is kind of the Wild West. It doesn't take a lot to get up to snuff on the regulatory front. And, I think there's this misconception out there that it's the Russians and the North Koreans, the SolarWinds type schemes that are going to do us all in. And not to deny the existence of those, but really it's your own employees who are going to do you in. If they are clicking where they shouldn't click, if they're not doing multi-factor authentication, et cetera. It could go on a while there, but start to look at what you've got in place there.
Well, I think that's great advice, and looking at DFS and looking at some of the settlements that Nick mentioned. with the multi-state AGs, the task force, as Nick is very familiar with, some data security professionals in these AG offices. That's what they do every day, all day. And so those are all in the public records. I think that's very good compliance advice for companies to just to look at what's in the public record, look at those settlements, and that'll be a very good start in terms of what a security program should look like. So I want to thank Nick and Katie. Really appreciate your great advice and your insights. So with that, I will wish everyone a good day.
Thank you.
Thanks.